Planning for retirement is a significant financial goal that requires careful consideration and strategy. Now, dividend stocks are often considered a reliable source of passive income during retirement, as they do provide regular cash flow without needing to sell off any of your shares. Now, in this video, we're going to delve into the topic of how much money you really need to retire off of dividend stocks completely in the year of 2023. And go through the exact math and even different scenarios to really paint the picture. Now, we're going to go through all this and more in this video. Right after you please drop a like on it and subscribe for more content like this in the future. So first, we might as well go back a step and understand what dividend stocks actually are. So dividend stocks are shares of publicly traded companies that distribute a portion of their profits to shareholders as regular dividend payments. Now, some dividend stocks pay out a dividend on a monthly basis, but most dividend stocks pay out dividends on a quarterly basis. These stocks typically often belong to established companies with a history of generating consistent earnings and demonstrating a commitment to returning value to their shareholders. Dividend stocks offer investors the potential for income generation and the opportunity to participate in the company's future growth. So now that we know the basics about dividends and dividend stocks, let's talk about some of the factors affecting retirement income. Several key factors come into play when determining how much money an investor would need to retire off of dividend stocks. Now, these factors include things like the desired retirement lifestyle. The lifestyle an investor envisions during retirement will significantly impact the amount of money an investor needs, which is of course going to significantly impact the amount of money invested in dividend stocks the investor is going to need. Considering things like housing, travel, healthcare, and other expenses to estimate the income required to maintain the investor's desired standard of living. Also things like where does this investor plan on living? And for the sake of this video, let's go off of this example. The average yearly cost of living in the state of Florida is $50,689 per year. So let's just round that up to $51,000 per year. But keep in mind there's different states that have higher and lesser costs of living on a yearly basis. So make sure to take that all into consideration when figuring out how much you think you're going to need. So now that we know that we're going to need somewhere up around $51,000 a year paid in dividend income in order to completely retire off of the dividends. The next question, of course, is going to be, well, how much do I need to invest into dividend-paying stocks or ETFs in order to have my entire life covered by the dividend income? One metric that's going to come into play when trying to figure out how much money you need to invest in order to cover your living expenses, again, for this example, being $51,000 per year, you're going to need to look at different stocks and ETFs and look at their dividend yield. Now, dividend yield is a financial ratio showing the return an investor would earn from an investment based solely on its dividend payments. If we were to look at the Schwab US Dividend Equity ETF, or SCHD for an example, SCHD has a dividend yield of 3.55%. Now, the math on this is quite simple. For every dollar of SCHD that you would buy, you would receive around $3.55 per year in dividend payments. Now, some more easy math to figure out how many shares of whatever you're looking at that you're going to need to purchase in order to have the dividends completely cover your living expenses is going to be the following. Pick a stock for this example, we're using McDonald's. Then go and see how much in dividends this company pays on a yearly basis. So for McDonald's, we're looking at around $6.08 per year. Now the math is really simple. You just take the $51,000, which is how much you're going to need in order to cover your living expenses, divided by how much, in this case, McDonald's pays out in dividends every single year, which is $6.08 per year. And if you were to divide that, you would need 8,388 shares of McDonald's in order to completely retire off the dividends. Now, McDonald's is currently around $295 per share, which means in theory, you would need around $2,474,506 in order to use McDonald's solely to retire off the dividends. Now, keep in mind, going off a dividend yield, McDonald's only yields around 2.06%. And it goes without saying that if you were to choose to invest into higher yielding dividend stocks or ETFs, the amount of money needed is going to be much, much less than the example that we gave for McDonald's. Let's say we're going to use Verizon Communications for an example. Verizon has a forward dividend yield of around 7.46%. And Verizon pays around $2.61 per year in dividends for every single share of Verizon that you own. So if we were to head back to the calculator and use 51,000 divided by $2.61, which is how much Verizon pays per share per year, you need around 19,540 shares of Verizon in order to completely retire off the dividend income. Now, Verizon is currently around $35 per share, which means this investor, if they were to choose to completely retire off Verizon, would need to spend around $683,000 into Verizon shares in order to completely retire off the dividend income that Verizon pays each year. Now, another example and an even higher yielding ETF is going to be the SVOL ETF, the Simplified Volatility Premium ETF. This is sort of a complicated ETF for newer investors, and I implore you to do your own research, of course. But just for this video's sake, let's use SVOL for an example. So SVOL paid out around $3.87 in the last year. So back to the calculator, if we were to take $51,000 divided by 387, we would need around 13,178 shares of SVOL in order to retire completely off the dividend. Now, SVOL currently costs around $23 per share, which means this investor, if they were to go this route, in theory, would only need around $303,000 in order to have SVOL's dividend completely cover their bills. So now that you understand exactly how much money you're going to need in order to retire completely off of dividend income, I encourage you to go through different stocks and ETFs and to do a ton of research before building your long-term portfolio. But now that you understand how simple and easy it is to do the math, you can now as a long-term investor sort of work backwards and see what needs to take place in order to retire. But I want to hear from you guys down below when it comes to retiring fully off of dividends. Is your goal also to retire completely off of dividend income? And if so, by what age are you shooting for? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks for stopping by, guys, and I'll see you in the next one.